So you guys have probably, hopefully, seen me speak last year, because I definitely recognize a bunch of faces here. So I'm going to try to make this presentation, and I've actually added a bunch of slides in the end, a little bit more relevant to the current market dynamics that we're all experiencing right now. So just a little bit about Agnitio. We were founded in 2003. We are a fully authorized, regulated, licensed investment bank in London, gaming focused. And you might ask yourself, well, what does that mean? So that means we are authorized to actually advise studios, owner-entrepreneurs in raising specifically Series A investment. And when I say Series A investment, I'm talking 2, 3, 4, 5 million euros, really from large VCs or institutional, some of the largest publishers worldwide, through then to exiting your studio. So if you're fortunate enough to take your studio to profitability, take it to a level that you feel actually you're generating a significant amount of cash flow and have the interest to sell it, well then that's exactly what we do. So the most recent deal, we obviously advised Nicholas there, congratulations, on TickBits on their sale to Animoca, which was announced in July. So a great validation for Finland. Samuli earlier mentioned about some of the success stories, so that's a success story. Anytime you can exit your studio, anytime you can get paid for exiting your studio in a very profitable and future and have future earnings potential of that deal, I think is a success story. We also, before that, completed a Series A investment for Social Spiel, which is a Vienna-based mobile gaming free-to-play studio. Nexon was the Series A investor in that transaction. And then prior to that, we sold Future Games of London. You guys are probably more familiar with their title, Hungry Shark Evolution and Hungry Shark World, which at one stage got to a top 40 grossing overall worldwide, not only in the US, but in a variety of different Western countries. We also, on occasion, syndicate out angel rounds. So we've done that with Social Spiel, we've done that with Hutch Games, which is a leading London-based mobile free-to-play studios. They do a number of racing games, as well as Gungeon games. I'm not going to waste too much time on this. We all know how massive the industry is. This is specifically just the mobile piece of the sort of $90 billion market that people talk about. So it's growing. It's going to continue to grow. But it's largely dominated by a ever-shrinking number of larger players. So I think Samuli alluded to that previously, but if you look at this list, and what's interesting is in the yellow highlighted row, that's the only paid for app in that list. Everything else is free to play. And why did I select that top 100 grossing list from the US? Well, it's the biggest market in the West. It's something that we're all familiar with. I think selecting a Japanese top 100 isn't probably going to be that relevant, since a lot of us don't really understand a lot of those mechanics or what make those games really interesting. However, we can definitely learn from those. So the rationale behind it is US, the nice thing is it's just really the diverse mix of cultures, diverse mix of influences, not only from the East, but from the West. So it's a nice kind of microcosm of what could potentially succeed for a Western developer. And what's interesting also is you have some European countries, that out of that top 100 list have performed quite well. So 9 titles out of that top 100 were developed in Sweden, 7 from Finland, and then obviously you see some of the Asian players, Japan, and then obviously Israel as well. And then I mentioned also what is interesting in that top 100 list is you have a number of those larger players who continue to dominate. So King has 8 titles in that top 100 list, EA has 7. Zynga has 5, and then Supercell and Playtika have 4 each. So that trend is not going to stop. That trend will only continue. More and more of these larger players will continue to ascribe and dominate and gain more market share. Then another major trend that I think we all know about, CPI costs continue to go up, driven largely by some of the larger players, especially like Machine Zone, King, and other players in different verticals. So again, everybody knows what's happening. You know, there's the industry as a whole and absolute revenue is growing, which is exciting and interesting. But at the same time, fewer and fewer dominant players are again, you know, really grabbing more and more market share. And then again, couple that with CPI costs continuing to increase. And then you have consolidation. So now you even have, what's really interesting in this year in particular, which is a record year for M&A, is you're seeing more traditional console players buying some of the biggest mobile gaming players, or indeed some of the biggest Asian players buying some of the biggest mobile gaming players. So you obviously had Activision, which traditionally has been pretty much noticeably absent from mobile, acquiring King, which completed in April, and then you've had Tencent buying Supercell. So not only are you seeing traditional console buying some of the biggest players in mobile, but now Asian players buying into some of the largest Western mobile players. So that consolidation of this super large mega deals, I think will continue, but the issue is there's not that many players left to consolidate. So what does that really mean? That means that a lot of these larger players are going to, because of scarcity, start looking downstream. So that means they're going to be going and talking to mid-sized players that they can consolidate and grab more market share. So that's why all of this is really prompting more and more consolidation. The other factors that you have also in play is global stock market indices. If you look at them, most are still trading at all-time highs. So as long as you have very healthy public market appetite for buying into publicly traded companies, including gaming companies, and those share prices stay high, that appetite for buying smaller players will just continue. And again, these are all really signs that our industry right now is not this, you know, sort of grassroots, but it's actually become very, very mature. And so how does this really impact smaller emerging studios' ability to raise financing from VCs or institutional investors? So again, I caveat that this presentation is geared specifically towards those larger rounds, right? So I'm not talking about angels, I'm not talking about crowdfunding, I'm not talking about Kickstarter, I'm talking specifically, because this is our core focus, right, is really advising on those larger rounds. So VCs and some of the largest publishers. This is a list from 2015. So what's interesting is if you see here Finland, this is when a lot of the studios that you guys are very familiar with raised financing. And if you look, a lot of those are sort of in the range, probably the average is around 3, 4, 5 million, and then you have about 4 deals that are in excess of $10 million. This is this year. So definitely investment activity is down. So there's only been 11 deals through the end of August compared to 13 last year. Of course, I haven't included Critical Force since that was only just announced today, so actually 12-ish. But having talked to a lot of players in Europe, the second half doesn't really look that compelling. There's definitely interest from a lot of publishers and a lot of VCs to continue to invest, to continue to look at interesting companies, emerging companies in Europe. But I think unless you have an amazing team, unless you have a title in soft launch that is performing exceptionally well, a lot of publishers and VCs are going to be hesitant in providing that 2, 3, 4, 5 million type round, which is evidenced by a lot of the companies on this list. So if you go across, I mean, literally from the top to bottom, Marmalade, that was a follow-on fundraising. So that wasn't even their first fundraising. This is a company that has been around for quite some time, already raised money from VCs in the past. The same applies to Next Games. Armada with Samuli, I mean, he's been around and assembled a pretty world-class team. Flexion has been around for some years. This was a follow-on fundraising. Starbreeze, everybody knows, big public company in Sweden. So if I think about it, the only true smaller players in here are probably Dojo Madness and Cody Games. Snowprint is founded by one of the former heads of games at King, which is why King invested $5.7 million into that studio, since he brought over a core team of senior King employees. So if you see where I'm going with this, a lot of these companies have had that track record, that team, that world-class ability to execute that the investors are looking for. I think a lot of you guys, I'm not telling you anything new. A lot of these points remain true from last year. Finland continues to remain a pretty attractive market from an investor perspective. You guys have fantastic development here. You have support from Techis. You're very transparent and honest and forthcoming with information that you share amongst yourselves, which is fantastic, which I can tell you in the UK and other countries is definitely not the case. The UK, again, has a lot of platform and inherent technology expertise. I think that a lot of services businesses in Germany also have proven to be quite successful. Companies like Adjust in Berlin. So a lot of company, Aplift as well, that have that analytics, UA platform type of expertise that they can then provide on to studios. Again, I think I've mentioned some of these points already. One deal in the last 18 months in PC online gaming, which shows there's really very little appetite in that specific subsector of games. And what is also interesting, if you go back here to this slide, you've only had one deal this year in Europe that had a $10 million invested into it, compared to 4 in 2015. So again, I'm not trying to paint a negative or pessimistic view. What I am trying to suggest is that the investors, at least the VCs and publishers, are getting a lot more selective about what types of companies they want to invest into. So who's investing? A lot of you guys will know this. Companies, VCs like Initial and DN Capital in the UK, they continue to be quite active and invest and looking for sort of Series A investments across Europe. Most of the other European VCs will kind of not really be gaming focused, so they'll tend to really dip in and out, and if they manage to establish a very close relationship with a particular business in the space, then they'll maybe consider investing because they have belief or real interest that they forged with that particular company. Which actually creates this funding gap. And that's why you're starting to see a lot of these Asian publishers, companies like NetEase, CSUN, Scopely, Nexon, Gameville, continue to come here and do not only publishing deals, but also now are increasingly going to be doing larger investment deals as well. And you also have a few U.S. investors, Upfront and IDG, that have invested in companies like Seriously. So again, I've said this many times, it's nothing new. What are the golden rules for raising funding? Well, again, having that team in place is just absolutely crucial, critical. Can't emphasize that enough. Nowadays, it's not just that team that's important, but also the track record. How can they have demonstrated that they've executed before? Have they managed, operated, published, done the UA for a top 100 grossing title or before? Has that core team been intact, that they managed to break out from a larger player and now set up their own studio? Do they maintain a commercial focus? This is, I think, one point in the previous conversation people discussed, indie versus business. And again, I have my own separate views for that, but I think if you're going to talk to an investor, they're going to be absolutely focused, particularly in the challenging market dynamics we're faced with now, that you're going to have somebody in your founding or senior management team that has a very specific focus on how you're going to monetize, how you're going to generate revenue. So maybe it's not even a business guy, it's your chief revenue officer, or whatever you want to call that person. But I think there really needs to be a lot of emphasis and focus on how you're going to deliver a return on the investment that investor is going to make into your company, given the market dynamics right now. And then, of course, making sure all your admin, financially related documentation is in place when you're negotiating with investors is definitely paramount. And ensuring that you maintain contact with them. That's when I'm referring to networking skills. So yeah, I mean, again, having an experienced team, a world-class team that has all the relevant functions within your organization at a world-class level that ideally have worked before is crucial. I highlight the red specifically because, again, a lot of gaming companies I've met, whether it's Finland, whether it's the UK, whether it's France, Spain, a lot of them are 100% focused on the game, but often lack that business or commercial person on their senior management team. Again, we already talked about track record. The more you can provide evidence or credibility or that you have credibility in managing a high-grossing game is going to be absolutely critical in the current market. We talked about commercial focus. Again, we talked about how do you identify and talk to investors. Well, I think a crucial thing is attending conferences, arranging meetings with them, sending them frequent updates. I mean, if you've only met an investor for the first time, it's going to be near impossible to actually get some sort of indication of interest, an LOI or term sheet from them. This is a dating game, if you will, so it's going to require a lot of time that you're going to need to dedicate to the process, getting to know them getting to know you, establishing trust, ensuring that you can hit all your milestones and deliverables when you're developing a game. So all of these things are absolutely crucial, I think, as you're into this fundraising process. And again, we mentioned financial competence. I can't emphasize enough how, if a lot of these things seem foreign, seem like I'm talking Chinese, then I think it's really important that you hire an advisor, an authorized advisor, somebody who understands the space, who can really assist in helping you prepare all the relevant documentation, introduce you to the right people, manage an entire process professionally. I wanted to add a couple of slides, and Frederick from TickBits is going to follow through with this, but I think it's probably interesting to talk about TickBits, which essentially a lot of people would probably classify as an indie developer. And what I found really interesting is and again, for a lot of the companies we've been talking about here, and what I've heard actually talking to a lot of them is once they raise funding, they get very excited, which absolutely they should, and they have some great investors on board. But what I always say is that's the time when the real hard work begins. So raising funding doesn't necessarily equate to success. So a lot of, unfortunately, studios I've met that have raised funding, you have a finite amount of time and a limited amount of resource in order to achieve what you're going to set out to do when you've signed that initial documentation with your investor. So your investor is going to, at board meetings, going to ensure that you're providing them with timely and frequent updates on how you're executing your plan. So if you're not going to do that, when your funding ends, you're kind of in a pickle if you haven't delivered on those deliverables, on those milestones that you signed up for. So again, I think that's really, really important that you have that clear commercial focus. And if you can achieve profitability, I mean, the one thing that really impressed me with TickBits, and I've known the guys for years, was that they managed to deliver a growing, profitable company, not only in terms of revenue and profits over the years, consistently, without any VC funding, and that's certainly a possibility as well. So what I often tell some people is, some particular companies that are looking to raise money is, well, if you can't, don't do it. If you feel you can actually achieve getting to profitability on your own without raising funding, fantastic, even better. You have less issues to deal with, less investors. You're going to have to not at some stage be forced into an exit because ultimately that's what the investors want. They want a return on their investment that they've made into your company. So I think that if you can achieve profitability, then you have a myriad number of options available to you. You can decide to just remain, independent and just do what you do and continue to make money. You could decide to raise money from from a position of strength, since you have leverage that you're already profitable. So you don't have to do any deal because you're already profitable, because you have cash in the bank. So you can say no. You're not kind of in this situation where you're forced to do something because you have to continue funding your company. Or you could, in the case of TickBits, decide to sell and test the market. So what I tell a lot of profitable companies at the moment that are emerging, continuing to grow, stable, have titles out in the market that are performing well is you have this record year for M&A right now. It's unprecedented. It's going to break every record that previously for quite some time. So it would be an interesting time to test the market. And as I mentioned earlier in the presentation, you have this scarcity value now. So a lot of the bigger and bigger players are getting bought, but actually nobody really talks about the vast majority of M&A deals, which are larger companies buying smaller players. The big companies are the ones that get all the news, the press release, the attention, the exposure, but actually most of the time, you don't hear about big companies buying smaller players, unless you know of those companies yourselves, or they're your own company. And again, there's a variety of reasons why larger players would find smaller companies attractive. And again, as I said, smaller to mid-sized deals will continue to dominate the landscape, certainly for the next 12 months. In fact, if you read most of the independent research out there, most industry experts expect M&A to continue. So as long as there's not a force majeure event or some crazy event that obviously we can't predict, and as long as stock markets remain robust, which clearly they seem to be, then that M&A will continue for the foreseeable future. I'm not going to touch upon this too much because then I'm going to steal all of Frederick's thunder. But I thought what was really particularly interesting for TickBits as a kind of small indie studio in Finland, thinking about why they should sell, they were in this privileged position of not having to do anything, as I mentioned. So they actually approached me and said, hey, you know what, I think we're at a position now where we've achieved what we feel we can independently. But now we're at this interesting inflection point in the evolution of our company where we think it might actually be worthwhile us talking to some larger players and becoming part of a larger player that can provide us with a lot more resource, provide us with a lot more cross-platform capabilities as well as cross-promotion capabilities to our existing games. And actually, it was one of the fastest transactions I've ever been involved in. And yeah, I mean, I think all parties were pretty satisfied with the result. So again, I think I'm going to summarize very quickly. In terms of fundraising, flight to quality, have to have world-class teams, successful titles in soft launch, and indeed, I continue, and a lot of industry experts continue to see profitable mobile gaming studios being acquired in the next 6 to 12 months. That's it.
Thank you.
Right.